You're watching Beyond Market. Welcome, I'm Esther Awoni. Many thanks for joining us. On today's show, we'll explore investment trends in Africa this year and find out how global investors are looking at the continent. You can join today's conversation with the hashtag Beyond Markets, and you can also send your thoughts, your comments to my Twitter handle too. It's at Esther O. Awoni. Now, political reforms and the adoption of a continental-wide trade agreement create an enabling environment for economic growth and attraction of foreign direct investment. That's according to this year's EY Attractiveness Survey. Now, the report also notes that job creation from FDR is at a 5-year high. Now, EY Africa Markets leader Roderick Wolfenden and EY Regional Managing Partner for West Africa, Henry Egbiki, join me today to discuss investment trends on the continent. Thank you, gentlemen. Pleasure to have you on the show today.
Thank you. Thank you, Esther.
Before we look at FDI, the foreign direct investment trends on the continent, I wanted to just quickly look across the continent to look at the state of the economy on the continent. We were talking earlier about how the World Bank just today revised its growth projections for sub-Saharan Africa, and I'm just wondering, we're still seeing weakness, across the region, and that's being worsened by uncertainties on the global economic front. I mean, the U.S.-China trade tensions the ripple effect has been quite interesting. Rod, let me start with you. When you look across the continent, just looking at the pace of growth and the strength of the African economy, I mean, what can you tell us?
Yeah, so Esther, I mean, Africa is a market, is a continent of 54 sovereign states, and so we need to go down to a regional level to really get a view on what's taking place. So you look at North Africa, Morocco, Egypt, two of the big economies, both seem to have been growing at a fair pace. You look at East Africa, Kenya, Uganda, Rwanda, Tanzania, Ethiopia, their growth has actually been quite robust. All of those economies growing north of 5%. And when you look at it across the continent, our fastest growth economies have been in East Africa. However, to really get a view on the economic growth in the continent, you've got to come down to the three really big economies, and that's Nigeria, South Africa, certainly Angola. And there, for all three of them, have been growing at below certainly their potential and certainly below their recent trend performance. And so to tie that back, there really has got to be a boost in growth in those three big economies to really start having this bigger impact across the continent.
Now, Henry, I mean, we keep talking about the potential of Africa, the African growth story, this huge emerging middle class, and now, of course, recently, the African Continental Free Trade Area. But when you look at growth within, especially like Rod said, the three biggest and most important economies on the continent, and projections for the next 3-4 years, growth is not significant. I'm just wondering, that firepower that the African continent needs and being led by these major economies is still not there.
Yes, I think the potential is huge. If for the Africa Continental Free Trade Agreement, the potential is huge. I think last year we said when we reviewed it, even up to this year, we say it has a potential of increasing Africa's GDP by almost 35 billion. That's about 2.5%, growth rate. If it's done correctly. Well, of course, there are concerns around what action plans that need to be implemented to actually bring those advantages, those benefits to life. Issues around, how do you actually invest in infrastructure? Challenge is huge. How do you connect the countries across Africa? How you also deal with concern around dumping that could happen. Of course, the major non-African, major economic big players could actually dump products in some of the African countries, and they may find a way through this agreement. So that's a concern. You find that the weaker countries, the smaller countries, not the weaker countries, the smaller countries that don't have that kind of matured, economy at the moment in terms of diversification, might struggle in actually deriving the kind of benefits that they should derive. So that is on its own, Esther, I think the potential is there. was about how do we, deal with these challenges? How do we to ensure that we actually get the full benefits of this?
I mean, I agree. Obviously, yes, the growth potential is there, but I've heard many economists say industrialization, economic boom is not inevitable. You need to put the work down. I was telling you also how I just spoke with a World Bank official, and he said structural reforms, especially in key economies, is still lagging, is still weak. And he says until we see significant traction on that, we may not see the growth that Africa needs, at least the big economies need, to forge forward.
Absolutely. I think in addition to that is around how do we deal with the convergence of the regulatory, in terms of regulatory policies, legal, regulatory. I think that is also important, and that's also the economic reforms that we talked about. If we go deep dive into the report, you find that countries that have really engaged in have done the right economic reforms, that have the right environment in terms of business-friendly environment. A country like Rwanda, for instance, is driving about 8.6% growth. So that just tells you the importance of those metrics, of those issues that we need to deal with. So you are you're on point. Even the analysts are also on point. Okay,
Roderick, your perspective on that, and I'm happy that Henry mentioned Rwanda. Rwanda seems to have, sort of become somewhat of the poster child for Africa in showing that if you do put, combination of political will and the right structural reforms, we can actually see significant growth.
Yeah. And I mean, what we found in that has come through the report, one of the key findings is really when you look at what are those conditions that need to be present to really serve as a magnet for foreign direct investment. Clearly, the bigger economy or the bigger markets are themselves interesting to foreign investors, but not sufficient. So size of economy is very relevant, but on its own not sufficient. There are a number of other things. So what are those other things? The pace of economic reform is clearly something that foreign investors are looking at very closely. If they see investor and business-friendly economic reforms taking place, that serves as a very strong signal. Naturally, size of market is important, but also diversification. If we have single commodity markets, those tend to be more vulnerable to shocks in commodity prices. And so investors look at that perhaps with a bit more caution than where they've seen economic diversification take place. But the World Bank Ease of Doing Business Index is also a very important indicator. And those countries we've seen that have been very intentional and very deliberate about addressing the ease of doing business have also served to be quite powerful magnets. And so Henry makes reference to Rwanda. What's interesting about Rwanda is when you look at the amount of foreign direct investment it has attracted relative to its GDP, it attracts a disproportionately large amount of FDI as a result of those things that it has done. And I think it really serves as a powerful example to some of the countries across the continent where we think they could be attracting more than they do today, because they haven't necessarily embarked on some of those reforms, including making it easy to do business.
Now, Henry, I'm just looking at other economies and the competition for FDI. Obviously, Rwanda is doing an absolutely amazing job. But for the other countries, talk to us about the trends that we're seeing, the competition, and those countries that are, apart from Rwanda, that are also attracting a significant amount of FDI.
I think we talked about the North African countries. Last year we talked about the shifting that we saw in the tradition. Traditionally, the Southern Africa, led by South Africa, used to be dominant in terms of attraction to foreign direct investment. Last year, that shifting, started. That shifting still continues. So North African countries, Egypt, Morocco are still leading. Of course, followed by South Africa. Again, what we've done actually, we've done a weighting of the three pillars: jobs created, capital invested, and projects. So if you check the countries, you may find that Egypt, for example, might be higher at the capital invested level, but maybe lower at the jobs created on projects. But we've done that weighting. So we saw North Africa, followed by South Africa, and East Africa, and West Africa, so Nigeria being in the fourth position. So we've seen, I think, Morocco, South Africa, Kenya, right?
Yeah.
Kenya and Nigeria
So
in the fourth position. So,
Okay.
So just linking,
Okay.
Esther, to what Henry was saying there, we changed the way we look at FDI. And so last year, for example, just in terms of our methodology, the number of projects was the key determinant of FDI. We then revised that to take a more holistic approach, as Henry has just described, to include those other pillars: capital invested
and
jobs.
Okay.
And on that basis now, North Africa still remains dominant. This year, Egypt has emerged.
On all three metrics?
So on the weighted.
Okay, on the
so
weighted.
On the
Okay,
weighted,
okay.
Take the three and you weight them,
Okay,
and
okay.
we score and rank them on that
Okay.
basis. Egypt has come through as number 1, South Africa number 2, Morocco number 3. And last year, Morocco was number 1, which was the
Yeah.
point Henry was making earlier. So you can still see the North African countries are coming through quite strongly. Nigeria was in at number 4, and Kenya was in at number 5. So those 5 countries make up the top 5 in terms of the ranking of that composite FDI view.
Well, Henry, why was it important for you to include job creation? Why the addition of job creation?
I think it's important. You talk about inclusive, growth in any economy. Job creation becomes very, very important. Why? In fact, earlier today, when we did the launching we invited some media and some of our clients and launched this. I think that was, very heightened interest on what is the benefit. So FDI is a means to an end. So it's about how does that impact economic growth. Job creation is projects, job creation. Even when you talk about number of projects, so for instance, you lead your number of projects, you want to ask, how has that impacted? Of course, the long-term value creation is there eventually. So if you talk about investment in infrastructure, you have the longer-term value creation that can bring to the economy. But the immediate term, you are looking at how many jobs have that created. We talked today about China, the principle around China investment, bringing, taking the jobs to their people, and how is that impacting the countries where they're investing. I think that's important, because today we struggle with socio-economic issues around
absolutely.
unemployment. So every government that is negotiating those kind of agreements in terms of investment into the continent must be very deliberate on how many jobs would that be creating for
Absolutely, I think that's actually an excellent addition, and of course way to look at FDI. We're just going to pause at this point to come back and pick up from where we left off. I've been speaking to Roderick Wolfenden, EY Africa Markets Leader, and Henry Egbiki, EY Regional Managing Partner for West Africa, looking at investment trends on the continent. You're just joining us, Roderick Wolfenden, EY Africa Markets Leader, and Henry Egbiki, EY Regional Managing Partner for West Africa, are my guests today on Beyond Markets, and we're discussing investment trends in Africa. Gentlemen, thank you for your time so far.
Thank you.
Rod, let me pick up with you. Let's get right into those projects that we're seeing on the continent. Take us there.
Yeah, so a number of interesting findings have come through, and certainly some significant shifts. Esther, if we go back 10, 15 years, the sector that attracted the largest amounts of FDI, as measured by this composite of capital, jobs, and projects, were the extractive sectors. So mining and metals, oil and gas, I suppose unsurprisingly. Very positively, what we're noticing now is a shift towards more of the service-based sectors. And for us, in terms of how we've defined that would include your consumer products and retail, your telecoms, media and technology, financial services, and the like. And there's a very distinct and significant shift in that direction. If I were to just delve one level deeper, take telco, media, and technology.
Okay.
Historically, the biggest spend was attracted into the telecom sector, as we saw waves of, telecomization, if I can call it that, digitization, mobile coming across the continent, significant amounts of investment that's gone in that direction. Now we're seeing the shift from telco and into technology. So the tech giants, the likes of Microsoft, Amazon Web Services, Alphabet, the parent company of Google, you're seeing them making significant commitments to investing on the continent. So Microsoft, for example, earlier this year announced a $100 million investment in developing tech development centers here in Nigeria and in East Africa. And they want to use that to customize for Africa some of their applications, but also to develop in Africa applications for the rest of the world.
Was that strategic? Nigeria, West, and then the East?
I think very strategic, especially when looked at in the context of some of the other commitments and investments they've made. So earlier this year, they opened their first 2 data centers in South Africa, one in Cape Town, one in Johannesburg.
Okay.
And so you kind of see this plan to invest in the key tech hubs across the continent, of which Nigeria, Kenya, and South Africa are certainly among them.
Now, Henry, it will also be good to know, where these investments are coming from too.
Yeah, I think what we've seen this year, the investments are coming from North America.
Okay.
In terms of rankings, North America, France, the UK, China, and South Africa. Those are the first top 5, actually.
Now, I'm just wondering, for them, what are key priorities for these investors as they look to the continent in terms of, perhaps maybe those who are coming for the first, looking at Africa and wanting to come for the first time? What from your findings, would be priorities for them?
I think those are aligned with the countries that we noted earlier. You asked the question, which countries are they investing in terms of the top 5? And we talked about, North America. We talked about, South Africa. We talked about East Africa, led by the Kenyan and the other countries. We talked about Nigeria. So I think size of market is key.
Okay.
So if you look at East Africa, for instance, we talked about East Africa leading the growth across Africa. Even last year, they led the growth as well. So what are you seeing there? You're seeing the interest in the economic bloc, because, integration of the Eastern, of the East African countries, creating a market size of about 150 million people. And of course, it's easy in terms of mobility of labor and goods across the East African countries, much more seamless because of those the economic bloc that we see. If you compare that with West Africa, for instance, the ECOWAS, you just compare. Okay. The ECOWAS is not at that maturity stage. These African countries are more, that bloc is more, yeah. So we're seeing that interest. Of course, somebody asked a question today, how come a country like, I think it was Ethiopia, for instance, is driving that kind of growth when in terms of liberalization and privatization, they actually still struggling. People actually mentioned there's no stock markets, no stock exchange and all that. So what does that tell you? We know there's a new regime in Ethiopia. So those, they are beginning to open up the economy now to, for a private investment. It tells you a country like Morocco has more potential to actually grow than what you see today. So those are the things that investors are looking at. In Nigeria, for instance,
for that investor, that would be, that investor is taking a bet on expectations that this economy is opening up, and these are a couple of the things that we expect as they open up.
Yeah, of course. Investment is in anticipation of future returns. So you can use the historical trend, but you're not actually investing in the past. You're investing in the future. So you look at what do you see? What is the trend analysis? You use that to project the future. Okay. So if an investor that is coming to Morocco today is saying, even though this is the state of Morocco, given what is happening, if that trend continues, there's more to come. So it's attracted to put that investment. Morocco, for instance, I'm sure he will probably talk to that in terms of, last year when I was here, I talked about the deliberate, focus of Morocco wanting to be the auto hub for Africa. And that investment, they are still focused on that. And we saw a lot of investment also going
Rod, if I could just quickly, still from the sector perspective, digitization, I know that, from what I see, that is going to be big, that's going to explode because that's where the future is headed. From a sector perspective, how easy is it to predict those sectors that would take the lead in terms of attracting FDI?
I think digitization, Esther, is absolutely critical sector for us to get right, and that's the case for a number of reasons. One, investment in digital infrastructure is very enabling. So it allows other businesses, sectors, services, including government, e-government, and the way government serves its citizens to really step up a notch. And so we're not surprised to see the amount of interest and the amount of investment that is going into technology infrastructure, because there are now something in the order of about 600 tech hubs across the continent. If you look at what's going on in Kenya, if you look at what's happening here in Nigeria, Egypt, and South Africa, just to name 4 countries with significant tech hub development, you can see that that digital infrastructure is really at the heart of that. So for us, that's a very important and a powerful signal, because it also signals to investors that they would be coming into a market where important infrastructure that would allow them to set up their businesses and to grow their businesses, that infrastructure would be in place. So absolutely critical.
Now, quickly, let's go into the Africa Continental Free Trade Area. I'm interested to know how that could change the dynamics of FDI movement, into the continent. Are we seeing signs of that already? I mean, it's just in the early stages, but how are investors preparing for that?
So, I mean, there's a number of ways to look at it. I think fundamentally, the African Continental Free Trade Agreement could be a game changer for our continent. Henry gave the example of the regional economic communities in East Africa. Look at how powerful an investment proposition that now becomes when you can bring those countries together. And rather than looking and assessing the investment potential on a country-by-country basis, you can now view them as a regional bloc. The free trade agreement across the continent now has the potential to do this on a mega scale across the continent. So its potential is massive, but it would not be without some formidable challenges that would need to be overcome. The regulatory and legal frameworks and regimes would need to be put together. We'd need to architect a very well-considered set of rules that would govern and manage and mitigate against potential abuse by countries who maybe create goods outside. They leave the final completion of those goods to take place.
The rules of origin.
The rules of origin take place in market, and then to now try and get the benefit of free trade. Those are all these sorts of issues we'd need to look out for. But to a foreign investor, Esther, absolutely a potential game changer, because Africa, with all its people, now starts to move towards a single market, and that prospect is very exciting.
Now, Harry, looking at your report, I was looking at I think it was the front page, which says, how can bold action become everyday action, just tying that into the discussions we've had so far in terms of those decisions that African countries need to begin to take now in terms of, strengthening, from either regulatory, legal, ease of doing business across the board if they want to have that competitive advantage, because so many countries are competing for FDI across the world. So just to share your thoughts on that in terms of those actions that need to be taken, and if you've seen any across the continent at the moment.
Yeah, I think the focus on ease of doing business for most of the countries, that has to be stepped up. Last year we saw, 2 years ago, we actually saw heavy focus by the Nigerian government, for instance, and we saw the impact of that in the ranking that came out. I think we jumped about 10 places, even though the year after we dropped by 1. So I think that is one. It's also around not just the talk show, as we just need to make sure what we say and what we do on the ground, they are aligned. Yeah, so I think that's important. Also, there are other challenges around that. Security needs to be dealt with, infrastructure, investment in infrastructure, and that's also linked to the regulatory and the legal that we talked about before. Set it in policies. As I said last time,
predictability, not the somersaults that we see from
consistency
time to time.
in policies. Said investors want to be certain, so not somersaults in policy. You don't know what to expect. A change in one government, a change of government, you don't know. There's no loyalty to the agreement signed by the other government. So, and that's a big concern. So, as I said, money is a coward.
To go where it finds the least resistance, obviously.
Exactly.
Rod, final thoughts. What is it that excites investors the most about the African continent? I know that rhetoric is still out there. We keep saying, Africa is an emerging star. Frontier of all kinds of potential, etc. whether we're walking the talk is a different story, but I mean, your thoughts, final thoughts on how this, to what extent this excites investors.
Yeah, I think there are a few things that excite investors. One is we have a large population. It's a young population and an increasingly educated population. You look across a trend over 7 to 10 years, incomes have been rising in some instances, not quickly enough. But those are all factors and attributes that are of particular interest to investors because it talks about the future potential of these markets. If we look at the rapid urbanization that takes place, people are moving increasingly into urban centers. They need to be fed, they need to be clothed. And so the investments that are flowing into setting up consumer products, retail hubs, and those investment sort of set centers is not surprising given that sort of movement. So I think those are just some of the things, Esther, that would excite investors.
Okay.
And an increasing sense of, I think, of rule of law, of democracy being in place in these markets is also really important.
Absolutely. Gentlemen, I'm going to have to leave it there. Thank you so much for talking to us. It has been an absolute pleasure having you on Beyond Markets. I've been speaking to Roderick Wolfenden, EY's African Markets Leader, and Henry Egbiki, EY's Regional Managing Partner for West Africa, looking at investment trends across the continent. Well, that's our show for today. Thank you so much for being a part of it. Remember, you can watch all previous episodes of Beyond Markets on our website. That's cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets. You can send your thoughts, your comments to my Twitter handle too. It's at Esther O. Awoni. For myself and the team, it's bye for now.